Okay, recording in progress. So we'll have more joining as we go along, but I like to get started on time. We've got a pretty major agenda. I'll share my screen here. Let me know if you can see tonight's agenda.
It looks like it's coming. It says Floyd has started screen sharing.
You got it?
Not yet. Still spinning. There we go.
Welcome everyone to our Anchorage IBD, especially to anyone that's new. I want to give a special shout out to Reggie. I don't know if he's with us tonight, but Reggie led our Anchorage meetups June, July, and August. It's the first time in the 15-year history of Anchorage IBD meetup that we ever have summer sessions, and I think people enjoyed that quite a bit. I know I did. So much appreciation to him. After every session, we always send the recording out. Much appreciation to everyone. We're going to do a poll real quick to get a sense of where people are. I've got 3 poll questions tonight. Let's see. I wonder if I have to stop sharing to do a poll. Let's see. I might have to stop.
I don't think so. You should be able to do it.
Okay, here we go. Polls. Poll number 1. Where are you tonight? Please answer. Now, I'm always impressed at how many people are joining us from the East Coast. Right now, 54% of our attendees are on the East Coast. It's 9 o'clock back there, I guess. Okay, I'll give another minute. We got 80% participation. If anyone else wants to click on where you are. Right now, for the first time, I don't think we have anybody outside the U.S. Okay, 85%. I'm going to end the poll. Hopefully you can see the results. This always cracks me up. I'm the only one from Alaska. 27% Pacific, 3% Mountain, 17% Central, and the winner is the East Coast, 53%.
More than half of us are from the East Coast, and then East plus Central is more than 2/3.
Next question, market exposure. You see the question?
I am not, but maybe because I haven't taken away the poll results yet.
Let's see. Oh, let me go back. Let's see. Well, maybe we'll stop sharing on where you are. Let's try market exposure now. Let's see if you see that one. Just let us know where you are. There's no right or wrongs on this thing. It just gives us a sense of what our folks are doing out there. If you're unsure, just make a guess. You probably know if you're all cash or 100%. We got 80% participation here. I'll give it a little short time to get some more. We're up to 82%. Hopefully people find this type of thing interesting. Okay, I got 85%, so I think I'm going to end it here and launch the results. So 17%, 0 to 20, 20%, 20 to 40, 33%, 40 to 60, 27%, 60 to 80, and 1 person out of 30 that responded is either fully invested or maybe even on margin. So it's a pretty broad mixture there. About 37% have 40% or less, and about 63% have 40% or more. Let's stop sharing on that one, and I have one last question.
Yeah, that was pretty much a bell curve right there, the market exposure.
Here's a really simple, I think everybody can handle this one. It's yes or no. Did you buy anything new this week?
Stock or ETF?
Is that Rick?
Me, Rick.
It's supposed to say,
Yeah. Yes.
spell check, not catch that. This is very interesting to me because today IBD changed the recommended market exposure for the 25th time this year. And then you move up to 60 to 80% exposure. I think that means they're saying we're in a confirmed uptrend. Yes, They put us a confirmed uptrend, and 71% said yes, they did buy something this week. And then I have an NP, which means no, 29%. So thank you for responding. We had another 85% on that. There may be folks on an iPhone or iPad or traveling that can't respond, but I appreciate the participation very much. I'm going to stop the polls.
Hey, Floyd, I'm trying to get into the website. I'm on my phone, but I'm trying to get in with my laptop. If you can let me in.
Oh, I'm not showing that anybody is waiting to get in.
Okay, for this one, I used the link that was on the website.
I just found that we had 11 people in the waiting.
No, I just canceled. I had canceled. I'm starting it up again. It's giving me problems.
Rick, you thought 60, 80% was last night. I'm pretty sure they did that today.
What's that?
The market exposure on 9/11, 40 to
Yeah, I think they went-
60%, and today they went 60 to 80%.
Just a couple of days ago, they were 20 to 40. They really zoomed up there.
Yes.
All right, now get in. Thank you very much.
Recording in progress.
Oh, sorry.
I hope we're still recording.
That's what I get when I have two things looking at the same time.
Let's see. I'm hitting admit all. And I'm not sure everybody is. Oh, yeah, it says they're joining. Looks like there's just a little bit of a lag. The other thing I wanted to show here was I did a quick analysis. Can you see this year-to-date performance on leveraged exchange traded funds graph?
Yes.
This one's interesting to me on how volatile it's been with SOXL's got the most volatility, and as of the beginning of the month for the year, SOXL's down 17.3%. It went up a lot today. But as of a few days ago, FAS, the triple financial, was the best year to date. But back at the end of June, FNGU was up 90.9%, now only 36. So the nice thing about our strategy where we're using stochastics to develop buy and sell rules is when one of these is on our upswing, we're invested. And when they roll over and start on a downswing, we go to cash and try to get the best of both worlds and not just do a buy and hold on SOXL and be losing money, as you can see. So that's, to me, was quite interesting. But we got a buy signal, as I said earlier, we got a buy signal on the weekly strategy for TQQQ today. So I ended up going in pretty heavy, 65.15 fairly early in the day, and I think it closed at 66.48. I noticed that after hours action, the market was still showing strength. So it'll be interesting to see what we have tomorrow. I think that's the main things I wanted to cover. Oh, I wanted to cover the big picture briefly. Let me just get that up. And then we'll let our main speaker tonight, Gary, we want to give him maximum time. Are you able to see the big picture where the headline says stock market extends rebound? As you read the big picture, every day that the market's open, it only takes 5 minutes or so to read it, packed with really good information. The stock market ended solidly higher Thursday as Wall Street reacted to more inflation data ahead of next week's Federal Reserve policy meeting. The tech-heavy NASDAQ regained its critical 50-day moving average, another bullish sign. There's this video. If you use this gear symbol, you can watch the video at a faster speed, and it's still very understandable. There's very good information here. So it says the Dow Jones gains 0.6, S&P 0.8, NASDAQ 1%, Russell 2000 1.2%. All S&P sectors were higher. Breadth was positive. Volume fell on the NASDAQ and New York Exchange from Wednesday's session. Early Thursday, the producer price index for August came in mostly online. Within the big picture is this thing called market pulse. And Market Pulse says the NASDAQ gained the 50-day line exposure 60 to 80. They dropped one distribution day today. The NASDAQ had 5 earlier. And these are the stocks that were up in volume, the leader stocks and the leaders down in volume. On Holdings made a major move today. Look at that, up 5.67%. This is a shoe company. I recommend you go through and read every word on the big picture. And I watched the video probably 90% of the time. It doesn't take that long. There's a good bunch of information there that will help us all be smarter investors. So what we're going to do, now we're up to 50 people. We're going to turn this over to Gary, and Gary's going to share some very interesting information. There's been a lot of research, a lot of backtesting, a lot of fine tuning, and we're gaining, at least me personally, I'm gaining more confidence in the system. I'm very comfortable putting serious money into leverage exchange traded funds. I use the weekly signal, primarily investing with TQQQ and SOXL. Gary, why don't you take it away?
Big question is, can you hear me?
Yes.
Yeah. I was on earlier and nobody could hear me. I ended up having to drop off, rebooting my computer. So I had my fingers crossed that you'd be able to hear me this time. So that's good news.
Okay.
So I'm going to, if it's all right with you, do the sharing. And I'm going to start off with something that a number of people have asked me. The strategy that we use runs on TradingView. And you have to be able to use TradingView in order to use the strategy effectively. So a number of people have asked me, does the free or basic version work okay? I decided today to do a more in-depth research on that. I want to do a quick show and tell what the basic or free version looks like. If you're not currently a TradingView user and thinking about joining, this will probably help you. So I'm going to do the share, and sharing is not turned on.
Oh, okay. I made you a co-host, and I think that's all I need to do. Try again, because a co-host should be able to share.
Okay, I got it now. All right, great.
And we've got 51 participants there, Gary, and no telling how many will watch the recording. And so everyone that's a Anchorage IBD meetup member, there's about 700 of us. By Saturday, I'll send the link out to this session, and we'll also send a link to Gary's slides.
All right. Can everybody see the TradingView chart?
I can see it.
Great. Yes. This is the free version, and I changed it to dark mode. I put up the TQQ symbol in the bottom left-hand corner. It says, get John Carter's favorite options trading system. This comes free with ads. The only indicator on this right now, besides the price candles, is the stochastic strategy. I can only have one indicator at a time. So I can't add moving averages. I can't add a MACD. I can't add anything else to this chart with a free or basic version. So that is extremely limiting. For people that haven't used this yet, but those of you who have used it know that we have different layouts up at the top, and we can have multiple charts across the top that we can go to. With the free or basic version, you can only have one layout. I have one layout named strategy, TQQQ. In order to do anything else, I have to change this layout. In other words, I cannot have multiple layouts. So if you are wanting to work with, let's say, the TQQQ weekly and the SOXL weekly, you would have to change all the settings to go from one to the other. You can't click on a different window to go to a different symbol. The free or basic version works, and I can run the strategy on this fine, but the limitations are painful. If you're going to spend any time at all with this, I highly recommend you buy the essential. I think it's the essential version is the least expensive, but I would go that route first. Okay.
And Gary, this is Floyd. Isn't it true that maybe a couple of times a year they have like a half off sale?
Yeah, they do. And there's one coming up around the Good Friday. I'm sorry, not Good Friday, about around Black Friday. So Thanksgiving time. They generally start running it about a week or so before Thanksgiving and then about a week or so after. Well, depending on what you ate on birds.
What were you going to say, Rick?
That's when my version of the trading view is like half price was like $200 instead of $500 for the year. So that was a good time to get it.
Floyd here. I'll just interrupt briefly, Gary. If you're going to use a leveraged ETF strategy, and if you like what you're going to see Gary presenting tonight, one good trade will pay for 10 years of trading view, in my opinion. Go ahead.
I just tried to load up the PowerPoint. Can you guys see the?
Yes.
Yep.
Okay. All right. You're seeing the one screen, right?
Yes.
Correct.
Perfect. Great. I'm still trying to get used to using dual monitors, so it can be a little challenging sometimes. All right. So about the LETF, leveraged ETF stochastic strategy, and I'm going to refer to that as the strategy tool for a lot of this presentation. It's a lot easier to say, and in essence, that's really what it is. It's a tool to help you make decisions. And we see it as an excellent tool. It's been very helpful to a number of us. We've come out with a number of new releases. The strategy was done with something called Pine Code, and it's a programming language. It's pretty much a solid strategy at this point, but I have noticed a few things that could be better as far as alerts, either in the way that our alerts are showing up or the way that alerts are painting on the chart itself. We're aware of those, and we are working with the programmer to get any of those anomalies resolved. Hopefully you won't notice anything, but if you should notice something, that's what's going on. We've got two new releases tonight. One is a new spreadsheet for best settings and results. The key things about the new spreadsheet are that we've added settings for nail as an example. We've tweaked some of the other settings to get better performance. And we did a lot of work looking at additional indicators because we can add another indicator to the strategy to boost its performance, either from the standpoint of overall profit or reducing the drawdown or the number of trades. We'll be talking about that tonight. We have come out with a new rules document, which I'll show you as part of the presentation. The initial rules did not cover strategies that use both weekly stochastics and now daily stochastics. We've had that for quite some time, but we didn't actually have it built into our rules or any profit taking. So we updated the rules document, and I'll show you that tonight. Hopefully tonight, you guys will walk away with a clear understanding of how to get started using the strategy tool successfully. I talked with a number of people over the past few months, and a few of them said, it looks really interesting. It looks like a great tool, but I'm really not sure how to get going with it. Where do I start with this thing? And so I'd like to cover some of that tonight too. And as part of that, I'll delve into things like the best settings and the rules documents. To start off, we have to start with a disclaimer. Key here is we're not offering any kind of investment advice. Keep in mind that as we look at what the strategy tool can do, We're going to be talking a lot about things like back testing, results that we've seen from past trades, and what the tool potentially could do in the future. But keep in mind, it's not any clear indication or guarantee that this is what's going to happen in the future. Ideally, it's about what we'd like to see happen from the standpoint of performance, but we can't guarantee that. We just don't know. Nobody can figure out what the markets are going to do from day to day. This is a risky strategy, a risky way to invest using leveraged ETFs. So keep all those things in mind as you look at this. This is from the new rules document. It's pretty similar to the last one where we focused on weekly stochastics, but now we're talking about if we get into a buy, we could be doing the buy either a weekly or daily stochastics strategy. The key is that we're looking to buy. If it's on a daily stochastics, it'll be the end of the day. If it's a weekly stochastics, it'll be at the end of the week on a Friday. But we're going to buy only if the fast line is not below the oversold line. We're looking for that fast line to come up above the slow line and give us a buy signal. If the fast line is below the oversold line, we wait until the fast line touches or moves above the oversold line. If it's way down there near the bottom, we want to move up before we make a buy, getting into that range between the oversold and the overbought. For the daily stochastics, like I said, it's going to happen that day, the buy. For a weekly, it'll be the end of the week. We've got a second thing called a rebuy rule. But I'm going to show you some illustrations of both of these in just a minute. A lot of times we will rebuy. If we sell because of a stop or taking profit, we will quite often rebuy if we can verify that both of the buy conditions are still true, that we're in the buy rule number one. That fast line is higher than the slow line, and the fast line is below the oversold line. Rebuy the next day. We're at the end of the day for both the daily and the weekly strategies. So this does not wait until the end of the week to do a rebuy. It's the very next day, no matter which strategy you're using. And just to clarify, when we're using the daily or the weekly strategy, when that fast line is the same or equal to the slow line, that's a buy signal. So a tie is a buy. If we're using a weekly stochastic and it's a Friday, being the end of the week, we'll use the new fast and slow line values to make that trading decision. And if it's not a Friday, we'll use the prior week's fast and slow line values to make a trading decision, because those are the only values we have up until that time. That's how we end up making a rebuy. What this looks like is a buy, and we are in between the oversold and overbought lines on the stochastics. Our fast line, blue line, is coming up above and crossing above the orange slow line. That is a buy signal. We can see it on the chart where it says buy.
Hey, Gary, this is Floyd. This is a question that would be timely to answer. How do we get the overbought and oversold lines and what those levels are through fairly intensive back testing? They're not the same for different LETFs. When Gary showed you the best practice rule,
I'd actually like to cover that later on in the presentation. We will be showing
okay,
that.
but we do it through back testing.
Gary, can I ask you a question on the previous slide?
Sure.
The one previous to this?
This one?
Yeah, this one. The rebuy rule here, fast line is number one, fast line is higher than the slow line. And then point number two, it says fast line is below the oversold line.
Shouldn't it be above?
Above, right?
Yeah, it should be above. Sorry, we missed that. I think that's just a typo.
Thank you.
So this is the rebuy, and basically we're looking for the conditions to be the same as for the buy situation, with the fast line being above the slow line, in which case we will rebuy the next day. Sell rules get a little bit complex in the sense that there's one major sell rule, but it happens two different ways. Bottom line is that we're looking for a fast line to drop below the slow line, and we want this to happen below the overbought line. All right. And that's a variable, of course, that'll change based on our settings that we establish. And I'll show you how that's done later on. That's going to happen at the end of the day price if using the daily stochastic settings. If we're not, if we're reasonable weekly, it'll be at the end of the week. TradingView labels this as cross under exit. So TradingView has what's called a strategy tester tab. And within that, you can see a list of trades generated by the strategy. You will occasionally see a sell called a cross under exit. And that's basically just a normal sell. There is a condition, though, that if the cross of the fast below the slow line happens above the overbought line, and then the fast line continues to drift down and eventually touch the overbought line, it will sell. That's called a K line cross under overbought exit. So what these look like is the normal cross under exit. Okay. We've got the cross happening between the overbought and oversold lines, and we're simply have the fast line coming down below the slow line. Blue line crosses down below the orange line. That's just the normal sell, normal everyday sell. Some people are asking about how we get the settings for the overbought and oversold line. We do that through backtesting to try to come up with numbers and strategies that provide us with the best performance. And part of that is establishing overbought and oversold levels. Those levels are put into our settings down here where it says longs are entered between a blank and a blank, and then shorts are entered between a blank and a blank. The longs basically mean a buy condition would be between an oversold level of 0 and an overbought level of 100. So anything that crosses in between those levels, 0 and 100, fast line crossing above a slow line would be a buy. Shorts are entered between an 8 and a 57 year. So again, oversold and overbought. So a level for oversold, in this case, it's 8. So this would be set at 8. And the other one would be set, in this case, at 57 up here. So a normal sell, this cross under exit, would need to happen between those two levels, fast line crossing below the slow line. And we can set these levels in the settings. There's a third tab called Style, where we set the overbought and oversold levels based on our strategies. This is the second sell condition where the cross of the fast line is happening above the overbought line. So it's happening up here in no man's land, and it's crossing the orange line, the slow line, and drifting down until it touches the overbought line. At that point, it becomes a sell signal. So it needs to hit this level before we actually sell. That is the second way we sell, do a normal sell with this strategy. It's just a matter of ideally being able to recognize those as sell conditions on the chart as they're happening, or maybe even shortly before they happen, because it can be very helpful to anticipate these things. The rest of the SEL rules involve what we call a one-day drop percentage. We call that a PD stop, or prior day stop. We set a percentage. We allow the strategy or the symbol, whether it be a TQQQ, SOXL, or FNGU, to drop that one day. If it exceeds that level, we're out. Basically, that's a stop. So if we set that at 5%, and it drops that day 5%, it's a stop, and we sell. If it is below that, when the market opens the next day, we sell right away. If it reaches that intraday, we sell at that point. We don't wait till the end of the day to make that sell. It's a way of providing protection against something happening in the market to your particular ETF.
If you get this one day drop, either at the open or during the day, all other rules are irrelevant, and all other rules don't matter. It doesn't matter where you overbought, oversold line is. It doesn't matter. If you get the one day drop, you just sell. There's no reason to wait.
That one day drop percentage is based on the closing price the day before. So your closing price changes from one day to the next. If you are using a daily stochastic strategy, you need to look at what the closing price was in the evening and set your stop loss at that 5% or 6% for the next day.
Also for the weekly strategy.
If you're using a weekly strategy, you still need to do the same thing, but you can get away with doing it less often if you have a large percentage for your one day drop. So in other words, with a weekly strategy, quite often you'll see 19, 20% percentages or even higher as a stop for the PD stop. And if you've got those high percentages, you probably aren't going to hit those quite as often in the marketplace. On a day-to-day basis, the chances of you hitting it aren't nearly as likely as using a daily strategy. But it's still something that you should be aware of and you should try to stay up on, because they will come when it will drop 20% in the day. In fact, we had one of those days last week, I believe. And it can be mind numbing when that happens. It's like, oh my God, I can't believe it happened. Then you're scrambling with, what do I do now? So it's better to try to stay ahead of this. The next one is the trailing stop loss. This is just trying to protect our equity, trying to make sure that we don't drop too far from the recent high after the last buy. It's going to look at the most recent high after the last buy and put in a trailing stop loss percentage based on that high. And again, this is a variable that will change based on the strategy settings. If you've exceeded that when the market opens in the morning, it's a sell right away on market open. If you exceed it intraday, it's a sell then, intraday. The last is a sell based on a profit target percentage. The strategy allows you to set a profit target percentage. This could be anywhere from 8% to a high end of 60-some%. It acts the same way as the other stops in that once you reach that profit target percentage, you'll sell right away. If it's intraday and it hits it, you'll sell intraday. Again, if the opening price is above that number, you would sell that day and open. Okay. After all of these sell rules, you go back to the buy rules and for the buy rule number one, and you determine when to rebuy next based on the conditions. One last thing I want to mention about the profit target percentage. Usually people set that so it's a complete 100% reinvestment of the profit when it does the rebuy. You don't have to do that though. One of the ways to mitigate your risk is to maybe just reinvest half of it or a third of it. But it's the kind of thing that you have to think through ahead of time for it to work well for you. This is what it looks like as far as the prior day stop. When this number is hit, that percentage, in this case, we've got the stop set at 12.9%. When it hits that, we sell. If it gaps down below that before market open, we sell.
Notice the date, February 24th, 2020. Why do you think we hit a PD stop on that day? Think about what happened in February of 2020. By using the program, it blasted us out of there. We didn't wait for anything. Once we saw that 12.9%, which we developed through thousands of backtest trades and looking at 20 or 30 different variables, the 12.9 is not a frivolous number. It's based on a lot of work. When COVID hit, for example, it blasted us to cash.
Floyd, is there a way the 1 day stop can be set in Thinkorswim like a sun stop, or does that have to be done every day?
It needs to be done every day, but let me ask this of the audience too. There are ways that you can do this through Thinkorswim and other platforms where you can write a small script that will automate that process for you, where we'll look at the prior day close and set your stop loss based on that. But it requires a little bit more than just setting a stop. It's more of a mini script type thing. There may be some people in the audience right now that know how to do that for one or more of the platforms. Or if you don't, if you wouldn't mind reaching out to whatever platform you're using and ask them how you might implement a stop like that, where you don't have to set it every day. That is something we would love to share with everybody, and it would make things a lot easier for everybody.
A couple of questions came through. One is, how do we set the overbought and oversold lines? That's solely through rigorous back testing, and they're not the same. The weekly and daily could be different. It could be different for TQQ than for SOXL. Gary's going to be sharing a best strategies page that tells you from our experience with back testing, and they're subject to change in the future, but we'll show you what our back testing tell you those values should be. And another question was, do we only use this strategy for daily and weekly? Do we ever use it for hourly? I don't know anyone that's doing it. It's intraday, but if you ran back testing examples, you could develop a strategy for game, but that's not something that we're covering.
Right now, the strategy runs on a chart that is a daily chart, and it uses either a weekly or a daily stochastics. And it was meant to be run solely in that manner. Are there any plans to change that? Who knows what the future will bring?
Another comment from Floyd here is, if you look at the daily volume on TQQ and SOXL, the volume is very impressive. So I'm convinced that there are major institutions that are day trading TQQ and SOXL. The volume is just amazingly high there. It'd be really cool. Well, what kind of buy and sell rules are those institutions using? But I noticed today, for example, on TQQ, it moved up and down multiple times. As a curiosity, pulled up the market surge stochastics on TQQ. I saw 3 or 4 clear buy and sell signals intraday today. I imagine the institutions have pretty sophisticated programs, and it wouldn't surprise me if some of them aren't trading TQQ 10 times every day. I mean, who knows?
Floyd, I've got quite a bit of information to cover. If we could try to hold the questions until near the end, that would be great. There's a good chance that I'm going to provide the answers to the questions as part of the presentation before we get to the end. Okay, thanks. So what am I looking at here? Okay, the trailing stop sell in this example, it doesn't matter what position the stochastics are in. It's just a matter of reaching that percentage for the trailing stop, and we need to sell at that point. This is the same thing on the profit target. Again, we reach that percentage and we sell. In this case, we sold, and immediately the next day we rebought, and it looks like we were able to buy at a much lower cost than what we sold at, which is always a good thing. If you have not already done so, if you're not already on TradingView, you need to be using TradingView. It only runs on TradingView. It's specifically designed for TradingView because it was done with a programming language specific to TradingView. And the resources that has links to a number of these. And you need to go through one, at least, if not more than once, to start feeling comfortable with the TradingView platform. If you are familiar with the platform and feel comfortable with it, it's going to be challenging to use the strategy. Email me your username. Everybody on TradingView gets a username. Email that to me, and I'll return an email with how long you're authorized for, give you an introduction, and provide links to different trainings that we've done in the past. The authorization date for most people right now, it was the end of September. I'm going to extend that to the end of November, so you can plan on that happening. We do this for short periods of time because things change a lot. This is still not a totally finished product, even though it's very close, but we still got some things that we are trying to fix, that we're trying to update. It helps us if we have relatively short authorization time periods.
Very quick question. Anytime you make changes to the indicator, do we need to delete and then re-add that?
What happens is that I will change the code on my end. I will reauthorize you, and you will need to download it again and reinstall it on your charts. I'm not 100% sure on that. Does anybody recall this last go around, exactly how that played out? The last release was the June release, June 4th, I believe. Chances are you're going to have to reinstall it. Let me put it that way.
James says you have to reinstall new code.
As far as getting familiar and comfortable with this, we have to go through some steps that include setup of both TradingView strategy and education. The education involves the TradingView strategy and learning how things come together. There are tutorials available. Floyd will make available for best settings and a results spreadsheet, the strategy rules, and the slides from tonight. Figure out which LETFs you want to focus on, and I'd recommend just one or two to start. Probably the two most liquid and most popular are the TQQQ and the SOXL. Understand what components are in each. When I say components, I'm talking about what are the 10 top stocks that comprise the base ETF. So that's really important. I'll give an example. A lot of people were buying NDDA over the past 3-6 months. If you're also buying SOXL and TQQQ and FNGU at the same time, chances are you're buying a lot more NVDA at the same time. This gives you an idea of the TQQQ and the 10 top components for that ETF. Actually, it's the QQQ, and then the TQQQ is the 3X version of it. NVDA is the third one to the top, almost 8% of the weighting of that index. Another example is SOXL, the top 10 here. This one, we don't have NVIDIA specifically listed in the top 10. Oh, I'm sorry. What am I saying? It's the second one. I almost missed one. I knew it was there somewhere. I'm going, wait a minute, where is it? Anyway, almost 9% of the weighting is NVIDIA. If you are buying NVIDIA stock, your holdings are significantly in NVIDIA, which is probably a good thing. However, when we're approaching earnings, you may have been more concerned about their earnings at that point. You to understand the component pieces. If you understand the components, you can look at the components, and if you understand how well or how badly they're doing, it'll give you a sense of how well or badly your ETF could do too. And then the next step is building a trading view chart layout for each of those ETFs. So you'd want to have one for TQQQ, another one for SOXL, and then you'd set those up using our best settings spreadsheet. I'm going to get into how this comes together now as far as the strategy tool settings and the spreadsheet review. There is a settings icon on the strategy itself when you load it up on the chart. When you press that, you have multiple tabs: input, property, style, and visibility. Visibility just means that you can see it on different types of charts. Inputs is key, and these first 2 pages of data provide the inputs on how we want the strategy to work. The properties tab, we really don't have to worry about too much. There's only 2 things that need to be changed on the properties tab. The first is the initial capital amount, typically set at $10,000. The order size, and type, in most cases, we'll go with percent of equity. So we'll put in 100% of equity. If you just make sure those settings are in, the property tab is done. And then all you need to do is worry about the input tab. And this is where the input tab comes into play. We've created rows that correspond with settings on the input tab. We have a stochastic time frame of D for day, stochastic type of settings for the stochastics of 20, 14, 4. We have our trailing stop set at 11% and our PD stop set at 5.1%. 11% here, 5.1% here. We set a profit target of 16%. Here's the profit target right here. We have set the strategy, the longs to be entered between 0 and 80, and the shorts between 30 and 70. Those equate to buying and selling. So when we look at the longs between 0 and 80, it means that as long as that fast line crosses the slow line between 0 and 80, we're good. And that's a buy signal. Shorts are between 30 and 70. So we have to have the fast line crossing below the slow line between 30 and 70 for it to be a normal type of sale. Now remember, I told you there were 2 different kinds of sells. One was the normal sell between the overbought and oversold level. The other was that drift down, the fast line drifts down. And that's this setting up here, where the strategy will exit if the fast line crosses beneath this level. And that's that fast line drifting down. In this case, we have it set at 90. Okay. So here's the 90 setting, the 0 to 80, and the 30 to 70. We can also add another indicator, and I'm going to get into that a little bit later when I show you the spreadsheet. But we can add another indicator and set it to impact our strategy based on either taking a buy above a level or below a level, or based on certain conditions that additional indicator sets up. We can set a level for that condition. And then we have backtest dates on here. This is not meant to be a tool for you to do backtesting. Some of our users have fun doing it. They've been very helpful to us with some additional settings. They're proven very profitable. But normally, we don't want you to do backtesting other than to make sure that you've established all of these settings correctly in the settings tabs for the stochastic strategy. So we use that as sort of a check. If the backtest dollar amount doesn't come out correctly, it tells us that something is wrong in the settings that you've done. And that happens a lot because it's not just one or two settings. There's a number of things involved here. So you set a backtest begin date and an end date, and we always set the timestamp to 00 and 00. So
Blown out on Zoom, so I don't know what to knock everybody.
this is a properties tab I just mentioned, and where you would set the settings to bring up the tabs. And this is that style tab. This is where you actually set the levels for the overbought and the oversold level that you want based on these strategy settings. Other than that, you really don't have to pay much attention to this. So just dipping your toe into this, if you haven't worked with this before, I'm going to show you a live version in just a minute, but I want to touch on a number of ways you can mitigate risk. That's very important when you're looking at a 3x leverage that, you know, if it goes down, it can go down pretty dramatically and pretty quick. So you definitely want stops. You want ways of limiting your risk as much as possible. So I'm going to talk about those on the live version here in a minute. And I already showed the basic version. You want to try to build confidence. Hold on a minute. Sorry. I'm going too far here. Things got out of order, I think. I'm going to pull up the spreadsheet format before I go into the live session. Can everybody see the spreadsheet at this point?
No.
Yes.
Great. A number of things I want to point out on the spreadsheet here. First of all, there's a daily and a weekly version of this. The daily we have highlighted in yellow, the weekly in blue. Make sure you understand which you're working on. And there are two versions of the daily and two of the weekly. We did a longer version looking at an 11-year period and a shorter version looking at a 5.5-year period of back testing. We did that for both the daily and the weekly versions of these stochastics. Couple of important things to keep in mind are the net profit down here is the profit the strategy gained through that period. So this is over an 11-year period to $2.3 million, almost $2.4 million, starting out with $10,000 over 11 years. We had a max drawdown of 56%. And the buy and hold did not even a quarter of that, about $419,000. So it's significantly better than a buy and hold. If we look at buy and hold, the max drawdown for buy and hold during that period was 81.7%. If you're doing the buy and hold, that's pretty tough to sit through. You'll find over here on the far right a chart that says buy and hold drawdown. We're able to find a couple of sources online that provided this to us on a year-by-year basis. It was pretty significant overall at 81%. If we look at a 5.5-year period, a little bit over $500,000 return compared to a buy and hold of $50,000. So that's 10 times the profit potential. And this is on the daily. On the weekly, pretty similar type numbers, 1.3 million on the weekly for 11 years, a little bit over 400,000 for the buy and hold, and the weekly 331,000 for the 5.5 years and 66,000 for the buy and hold. These numbers down here are individual years, and we looked at each year as if we were starting that year from scratch. If we started this strategy in the very beginning of 2014, a little over 57% return. If we started the strategy in 2017, it did a little bit over 79%. Looking at what a strategy does over a multi-year time period isn't always intuitive on what you might experience starting this up yourself in any given year based on this. Rick actually built a spreadsheet that enabled us to do this, and kudos to him. He did a great job on it, but it gives us the numbers for both our strategy and buy and hold. In this case, we had one negative year out of the 11 years where the strategy lost money. A buy and hold had 2 years. Looking at the number of negative years, 1 out of 11 for us, 2 out of 11 for the buy and hold. As far as performance, the strategy outperformed 6 out of 11 years versus 5 out of 11 for the buy and hold. The other way I looked at this was, all right, so we've got all these numbers. What does that come out to on an average basis? I added these up, all 11, and divided. And in the case of our strategy, it's 92%. Where this can be really helpful is if you're trying to understand, do I want to do a daily strategy or a weekly strategy? One thing that you look at is the average amount of gain on an annual basis for the daily is 92 versus weekly at 79, or almost 80%. A way of comparison and looking at the numbers. I tended to focus on the spreadsheet a lot on the later time period, the last 5.5 years, because I thought those were more significant to us today. So if you're going to do that kind of comparison, those are the numbers I'd look at more than anything else, is the 150 versus like the 127. And if you think about it, those numbers aren't that far off. They're really fairly close together. So you might make your decision whether to use daily or weekly strategy on other parameters, such as how often you make a trade, what's the drawdown, those kinds of parameters, rather than performance.
Jerry, could you scroll up to the top of that spreadsheet? There's one variable that you maybe forgot to mention, and that is the actual number of trades. You can see in 11 years, Gary's example, it required 266 round-trip trades for over 500 buys and sells. On the weekly strategy for the same time period, there were 67 round-trip trades. If your personality or trading style is such that you don't mind doing a trade, 2 or 3 trades every single month is fine. Or if you would prefer to only do 3 or 4 trades every year, it can help you decide if you would rather use a daily or a weekly strategy.
He gets in the spreadsheet for the weekly strategy. What is the overbought and oversold value?
I'm sorry, what is the line?
The overbought and oversold, because there is some.
That is right here. The longs are entered between and the shorts are entered between. Do you remember on the slideshow, I showed those two? Let me bring it up here. I'm sorry again. Yes, here we go. Remember on this one? Can you see that as far as the spreadsheet and the trading view?
Yeah.
Okay. So here we're looking at Shorts are between 30 and 70. Okay. That's our setting for selling. So that is 30 to 70 down here. And that means the oversold is 30, overbought is 70. And that is the settings we would use to determine whether or not we're in the right parameters for selling the position.
Okay.
Okay.
One more question. On the spreadsheet, it says exit if the fast line crosses beneath 90.
Yes, that's this one up here, where the 90, that is this one right here. Remember, I told you there are two different kinds of sells. One where the fast line drifts down after it crosses and then touches the overbought line. That is the 90 level in this case. So just one of the types of sells. The numbers here, from your perspective, try not to get too into the numbers themselves. It's very important to understand, of course, where they go as far as where to position them in the inputs. The number of levels, like whether it's 90 or 80, doesn't make any difference other than after our back testing and the experimenting, we determined that was the best level to get the best profit result and the lowest number of trades and drawdown for the strategy. Going back to the spreadsheet, down below here, I mentioned that we did a lot of work on additional indicators. We looked at 3 indicators in particular: percent ADR, that's average daily rate, percent distance from the moving average, and the MACD histogram. Okay. We looked at those 3 in particular, and we found with some of the LETFs, none of them made an impact. There was absolutely no impact in this case on a daily strategy for any of these 3 indicators. However, we found on the weekly strategy, there was an impact, particularly for the MACD, and I'm showing the results here based on that. So again, I said no for the first 2 additional indicators, but the profit went up to 2.79 million versus up here I said 1.3 million. So that's a pretty significant leap. And the other neat thing is the drawdown is 41.2%, whereas up here it was over 50%. By the way, there's fewer trades as well. This one is 67 trades. This one is 64 trades. By adding the MACD histogram here, we reduced the number of trades, increased the net profit, and reduced the drawdown. This is how it comes out on a year-by-year basis. I try to give the same parameters as far as the average annual and number of negative years and the number of years that the strategy outperformed the buy and hold. And I give it to you on both the long term, this is the 11-year, and the shorter 5.5-year period. I would focus more on the 5.5-year period. The more recent time frame, I think, is better. My point was that the buy and hold just did not do very well. There were no green highlights in here, as opposed to our strategy, which both had greens. I was just trying to highlight that overall, we're seeing a lot of good things out of the strategy. The very first tab on this, by the way, is an introduction and talks about the disclaimer. And I just went over the TQQ tab. The next tab is SOXL. And this very same information is on this spreadsheet. I'm only going to point out a couple of things specific to this one. If you look at the most recent 5.5-year period for the daily, I made a note here that the daily did not do as well as the weekly, particularly if you look at 2019 and forward compared to the weekly. So here's the daily for Let's look at the last couple of years, 84 and a quarter and 8.58 versus the weekly at 93, almost 94%, and then 139% for the first half of 2024. My point being the weekly did extremely well for SOXL. The daily here, the 346,000 is a pretty small number compared to the 5.5 million number here for the 11-year. And you'd wonder if there's something wrong with the strategy, but it's not. It's just compounding. You can see that because if you look at the $64,000 that the buy and hold did compared to the $618,000 it did for the 11-year, it's kind of similar. This is about a 10-to-1. This is about a 12-to-1 ratio, something like that. When we go over to the weekly, the last 5.5 years, almost $1 million. So it had a really great performance the last 5.5 years. The only thing is the drawdown is a bit tough, but this is another one of those where we were able to add on another strategy. Now, in this case, besides the MACD, some of the other strategies worked, and I gave you the results up here so you could see. If you want to experiment with some of these other additional indicators, you can compare the results. But the lower values here are all the MACD. And when we look at the weekly for the last 5.5 years, it increased that performance to almost 2 mil compared to about 900,000. And we reduced the drawdown to 43% and the number of trades to 27 trades versus 55, almost 56% and 29 trades here. So pretty significant difference as far as results.
And Gary, we should give a shout out to Eric Reese for helping come up with these alternate strategies.
We had a lot of help from Eric Reese, and also Chad helped us a lot with backtesting as well, and a number of the additional indicators too. But both of them have been extremely helpful, and we really appreciate their help. The third tab gets into a lot of the others. So we touch on FAST, UPRO, daily and weekly for UPRO. We only have a daily for SPXL. What I found interesting here is that UPRO and SPXL are both 3x versions of buy ETF. However, the performance is different. The SPXL had better performance than UPRO. So if you're going to use a 3x leverage ETF on the SPY, use this one. The performance is definitely better. I didn't do much on the 11-year here as far as additional indicators because I wanted to focus on the 5.5-year period. So in the 5.5-year period, a couple of things changed on this. One is you'll see an addition for nail. We had settings for nail. And down here, I showed you where the additional indicators would work and where they don't. It was sort of a hit and miss with these other LETFs. In some cases, they worked, like the weekly version of TECL. We had a good outcome. Same thing on the Fungo for the daily version. We did pretty well. FAST has been struggling a little bit. And then now did okay, but nothing that great. Actually, it didn't do very well at all, come to think of it. These are the major tabs that you need to pay attention to. And this is where you get all of your settings for establishing what you're going to do on TradingView. I'm going to close out the spreadsheet and move over to TradingView. For those of you that have not done this before, I like to give you an idea of how this works. So we're going to look at TQQQ, the weekly, and I am going to get rid of that and get rid of this. Normally, when you bring up TradingView, you would probably start out with a price chart, whether it be candlesticks or whatever you like to look at. But from here, you would add on the strategy. So it's just a matter of going up to indicators and going to invite only and selecting the strategy that you're going to add. Single click, it should come up. Now I have the strategy on the chart. And then I'm going to click here to go to settings. And the easy way to do this is go to properties first. Make sure that this is at 10,000. Make sure you set this for 100% of equity. Then go to input. Check both of these boxes. Change the inputs based on what we're going to set. We're going to do the TQQQ for weekly. The settings for that are W for weekly, MS for stochastics type, and we're doing long. So we're going to have a trailing stop set at 35.5, a PD stop set at 12.9%, profit target set at 33.6%. We're going to exit at level 28 and have our longs at 12 to 65 and shorts at 12 to 60. These stochastics are set at 5, 4, 3. So we're going to change this to a 4. So we have 5, 4, and 3. We're not going to add another indicator, so we just leave this alone. And set a backtest date because we want to make sure that we've done everything correctly. In this particular case, I know that the 5.5 year test date starts on December 31st of 2018. Here, I'm going to change the year to 2023. And then it ends on the end is July 19th of this year. So I'm going to click forward to July and set the 19th. Now, according to my spreadsheet, if I did everything right, the profit target should be $331,845. And that is exactly what we have here, $331,845. So that is the only time I really need to do back testing. Other than that, I don't care about back testing unless I want to do some stuff specifically with back testing. If I'm using this to get guidance and use it as a strategy tool, I'm not going to need to pay attention to back testing. On that date level, we're going to make one other change and set this date here, the end backtest date in the future. I always change the 0 to a 1. And the reason I do that is because otherwise you won't see indicators like buy and exits after the end backtest date, which I had set in July 19th before. And we want to see those up to date. So now I see them up to the current date. The last was a normal exit right here. To make things easier for me, I know that the shorts are between 12 and 60, and I've got a drift down of 28. So I'm going to use a style of 60 for an overbought and 12 for an oversold to help me visually understand where my normal sells will happen. If I see something like this, where it's drifting down, that could be K line, cross under, overbought, sell. Then again, it may not, depends on how close it is. Anyway, now that we're on the strategy, I want to talk a little bit about performance. And I thought we'd look at this just over the past, not even a year, but let's go back to about November. I go back to November 3rd of last year. I'm going to go to November 3rd. Click OK and look at my list of trades. Now I got the wrong date. Must be before that. This is the one I want to change. All right. Yeah, we had a buy November 3rd. So I'm going to start this on November 3rd. And the reason I'm doing that is because it helps if I do the right one. The reason I'm doing that is because from November 3rd until we only have a few trades. When we're looking at doing the weekly version of this, we have a significant PD stop level, which means we don't get stopped out very often. It's almost 13%, so we're not going to get stopped out a lot. In fact, we had 1, 2, 3 normal stops and 2 profit target reach stops during this period of time since last November. There are no PD stops, so we didn't get stopped out for the single day stop at all during that period of time. If I look at that, I go back to November 3rd. One of the tricks with this is the Alt G brings up a date range, and I can go to very quickly. I'm going to go to November 3rd. Now we can actually visualize each of these activities, each buy and each sell, and what happened during this period of time. You can see the strategy is doing what it's supposed to do. It's buying as we're coming up from a dip. We got a crossover, fast line over the slow line to buy. We got up to our profit target level. In this case, that was set at 33.6%, and we sold. The next day we bought because the conditions were still good. The fast line is over the slow line. And then we just sat back and watched the market continue to climb until we exited here. Okay. And we exited because we had a normal sell, cross under exit, and we sold, and we did not do a rebuy because the slow line is above the fast line. So there was no rebuy. The market went down. Here it's starting to come back up again. The strategy is doing what it's supposed to do. Gets us back in until we get to the profit level again. Another 33%. Yay. But this time we've got a rebuy the next day, and we rebuy and continue going up for a little bit until it starts to tank. This is July 19th, when we had a cross under exit. I'm willing to bet you guys remember this period when the market started tanking and really diving down. Well, we got out here and kept most of our profit. And we stayed out until we got another buy signal on August 16th. Then we got an exit here because we're starting to get some chop on September 6th. During this period of time, a profit of $6,000 on a $10,000 investment. So that's a 60% return in less than a year. Now, I said we could add an additional strategy to this indicator. I'm going to add the MACD on this. We go to my favorites, bring up the MACD. Whoops, wrong one. There it is. Okay. Now I have the MACD on this chart. Even down here, I'm going to do it all up here with our strategy. I'm going to go in here and add that by clicking on Add Additional Indicator. and I'm going to have selections. I do have moving averages on this chart. I could put in a moving average as a limiting factor, but in this case, I want to go to the MACD histogram because that's the level I'm going to use. And I click on that. I'm going to set this to a level of 0.5. And when I do that, okay, now, instead of 5 trades, I went to 4 trades. And instead of $6,000, I'm up to $9,000 in profit. So 93% return in less than a year. And that's on the weekly TQQQ. One way to mitigate risk on this is with that additional indicator. Another way to mitigate risk doing this strategy is to take smaller positions. If you normally do a 10% or a 15%, instead do a 5% position. Keep your numbers down a little bit more until you get used to it. If you are following some of the prior trainings, I also talked about a tactical strategy where sometimes we get multiple buys and sells in a row. You typically see more on a daily strategy, but that can be another way for mitigating your risk and reducing it. All these are different things that you can do to build your comfort levels and to really get into this slowly if you're not used to it. The other thing is on the take profit, we had 2 take profits in this. Rather than reinvesting 100%, we could have reinvested half of that or a third of it and then gone on to the next. Those are all different ways of mitigating risk, as well as, of course, changing your stop levels, which are one of the typical ways of doing it. Okay. Wraps it up on the live version. And I'm almost done with this presentation. Just one other thing I wanted to show. I talked about using a smaller position size. Another thing you can do is instead of using TQQQ, you could use the Qs. All right, just use the Qs. And one of our users, Chad, looked at using the Qs and using the 15-day simple moving average with it as a way to reduce risk. And over a 21-year backtest period, it came out with pretty good return, $233,000, or at about 16% per year, roughly. So that's another way you can approach this. And the last thing I want to mention was, what about paper trading? I've never been fond of paper trading. I always look down on paper trading in the sense that, if you don't have skin in the game, if you don't have a certain amount of emotion involved, that paper trading is probably not going to provide you much information or be able to help you that much. However, it's a little bit different when you're looking at implementing a new strategy. And that's where you can really build up comfort level by using paper trading.
Form a brand new strategy can be a bit nerve-wracking when you're first getting started.
This is pretty short, and I'd really like to share that time about done, except for showing you my resources page.
Awkward for us, TradingView makes the entire learning process so much easier by offering the ability to paper trade on even their most basic free plans. So today, we're going to be going through the entire process of creating a TradingView account, opening up paper money within there, and even a few examples of the types of trades that you'll be able to quit. First, we begin by opening up the TradingView account, either by using my link down below in the comments or by heading to tradingview.com. As soon as we open up the homepage, we simply come up here and click Get Started in the upper right corner. The page that opens up will display all the paid plans available, as well as a few key features of each plan. Now, if you use my link down below, you can try any of these paid plans completely free for 30 days. If you decide you don't need those advanced tools or features, you could also open up a free basic plan. If we choose to open up a free basic plan, the first thing it asks us is how we want to open an account. And in this case, we're just going to select email. And then all we have to do to open an account is enter the email and password that we want to use. It's not going to ask us for any personal info or credit card information. Once we do get the account opened up and we get signed into that brand new account, in order for us to access the TradingView charts, we are simply going to come up here to the very top of the screen and find the products tab. You then click the charts menu down below. We are immediately jumping into the TradingView charts. There are a lot of tools, a lot of features. There's customizations, and I do talk about that in separate videos, but for today, we're just going to focus on how to paper trade. Before we can place trades, we need to come down to the very bottom of the chart and open up the trading panel. The menu that opens up will then display all the brokers that could connect to TradingView, and here we can see there are quite a few. However, in our case today, we don't want to link our TradingView account to one of our real accounts. We want to link it to a paper trading account provided by TradingView. So right here, we can see it is the second on the list, and all I have to do is come down here and select Connect. It'll open up a disclosure in the center of the screen to confirm that this is in fact a fake account. This is entirely simulated. It is just paper money. So we'll then just need to hit Connect one more time. Now, at the very bottom of our TradingView charts, we can see our paper trading account has been linked. Within this panel, we manage our entire account. We can see all our open positions and active orders. In the upper right-hand corner, we can also see things like our overall account balance, and as well as our current profit and loss in the account. In terms of actually placing the trades themselves, we do have several different choices directly from the charts page or by opening up the order panel or the depth of market. To keep things as simple as possible, we are going to stick with the order panel for today. We'll go ahead and click on this to open up the panel. Now coming over here to the left, we can see the menu that has now appeared, the order panel. And this is where we're now going to specify how many shares we want to buy, the price we want to pay for it, and the order type to use. We will go through it one step at a time, starting at the top and working our way down. Coming up here to the top, the very first thing you'll see is the stock that we're about to trade. So in this case, Apple or AAPL. Immediately below that, we can then specify what we intend to do. Do we want to sell or not? In our example today, I want to buy some shares of Apple, so I'm going to select buy right here. Then immediately below that, I can specify the order type I intend to use. We've got a market order, a limit order, and a stop order. For those who are not familiar, a market order is an order that will fill instantaneously at the current price. You're essentially saying, get me those shares as fast as possible. The limit order, on the other hand, is an order where you are specifying a price. You are saying, I only want to buy the stock if I get this price will back. Now, the final one, the stop order, is generally used to exit your position before you lose too much money. That's why people call it a stop loss order. You'll generally be using this when you already have the position, and you're saying that if it goes down below X price to get me out. As an example, if we already had shares of Apple, and let's say we owned it at 138, we could say if Apple ever drops below 137, get me out because I don't want to lose more than that. Now, in our case today, we're going to be using a limit order. And this is the one you're probably going to be using most often. Now, right below that, we can specify the price at which we want to pay for these Apple shares. It currently says we want to buy the stock at $138.70. But if we highlight that, we could instead say, I don't want to buy Apple unless it goes down to $138 a share. Below that, I can specify how many shares I intend to buy. In this case, I currently have one share selected, and we'll go ahead and leave it as one. Besides those basic templates, you'll also notice that we have the ability to place a bracket order as well. This can be used to automatically put out an order to sell these shares for a specific profit target or get us out before we lose too much money. Those two trades are not going to go out until the opening trade fills, until we actually buy the stock. In this case, let's say we did want to use both of those. We wanted to automatically put out a specific profit target and a specific stop target as soon as we buy the shares of Apple. Since that's the case, I'm just going to go ahead and check both of these. And we'll first begin with the take profit order. I can first specify exactly what price I want to sell this stock for. In our case, let's say I wanted to sell it if it went back up to 145. Go ahead and type in 145 right here. And you'll actually notice a few different values in these boxes over here. Starting at the top, this is going to be the tick increment. It's essentially saying the price that I just said, starting at 145 a share, is 700 ticks above our opening price. For stock, a tick is simply a 1 penny. It is the smallest increment that should stop moving. Below that, it is also telling me the profit target that I'm trying to reach. In this case, I'm trying to sell this for a $7 per share profit. Now that I'm happy with that, I could also specify the stop target as well. Coming over here to the right, we can see the default is $133.97. Well, let's instead say I wanted my stop target to be at, let's just say 135 even. And now I'm saying I either want to sell this thing for a $7 profit or get stopped out if I ever lose $3. The only other thing I have to do is come down here where it says time enforced and specify how long I want these orders hit for. We currently have week selected, which means these orders are going to be good for a week. But if I clicked on that, I can also flip it up to a day order, a month order, or I can make it good till a certain date. Now, just to move forward, we're going to leave it set as a week. And now all I have to do to place this trade is come down to this big blue button, buy 1 share of Apple. You'll notice that as soon as I clicked on that, the orders have been placed, and I can actually see those a few different places. First off, we can see it right up here on our chart. Right here is our opening trade to buy that share at 138. Then we've got the profit taking order above it to sell it for a $7 profit or to stop us out if we ever lose $3. Besides on the chart, we can also see it in the orders panel down here in the lower left-hand corner. So right here, it says I'm trying to buy 1 share, 138, and it is a working order. I haven't bought that share yet. Later down the line, and let's actually say I wanted to edit this order because I wanted to get filled on it. I could do that a few different ways, whether it be by right-clicking on the order ticket right here, then coming in the menu and either selecting modify order to edit it in some way, or just hitting cancel order to outright cancel. Besides that, I could also come up here to the chart and find the order I intend to adjust, click on it, and either drag it up or down to the price I want to move it to. Let's say I wanted to get filled on this order, I can drag this up. And as soon as I let go, a little box is going to appear on the right to adjust the order. Here I can specify the price that I'm moving it to and select modify order to adjust it, which is exactly what I want to do. We can now see that the order has been filled. It's telling me I've got 1 share and how much I'm currently up or down on that share. And the orders tab in the lower left filled at 138.88. I can also come up to the positions tab at the top, and it'll tell me exactly what I hold in this account right here. So right here, it's telling me I've got 1 share of Apple. I bought it at 138.88, and here is my take profit and stop loss order. You could also trade things like futures or cryptocurrencies. Let's say we wanted to trade gold. I'm going to come over here to the right and type in GOLD. Then looking down below, we can see a gold futures contract right here, and we'll just go ahead and click on. We can now see the chart has flipped over to gold. Over here on the right-hand side, our order panel is also flipped to gold as well. Just like in the previous example, we would first start by specifying exactly what we want to do. Do we want to buy the contract? Do we want to sell the contract? In this example, let's say we wanted to sell it or short it. We could then come down below and specify the price at which we want to short it. In this case, we'll just leave it set as the current bid, the number that's filled in here automatically. I can then come down here and specify how many contracts I want to short, but in this case, we'll leave it as 1. I could also specify my take profit or stop loss as well. But in my case, it's not place this order to short the gold futures contracts. I'm going to come down here below and select sell 1 gold futures contracts. We can see the order has been placed. It says it right here. We got an open order to sell 1 contract. And I can also see it down here in the orders tab as well. To modify that order, I can come up here to the chart and drag that order ticket up or down to the price I want to move it to. If I wanted to move that up, I could drag it up here. The price on the right currently says 53,812. If I let go, the order panel on the right has modified the order to 53,812. Confirm, I would come down here and hit modify. That's really it. Those are the basics on how to open up paper money account and place a few different trades. Hopefully you all end up finding paper money as useful as I have over the years. It is an excellent way to get started and learn before putting any real money on the line. Also, if you'd like to try any of those TradingView Pro plans completely free for 30 days, don't forget to use my link down below. In the meantime, check out this video next. I think you'll all find it incredibly helpful as well. And I hope to see you all on the next video. A bracket order is one of the simplest forms of automation.
My background is all Can Slim. I've been through all of their training, all of their classes since 2004. I'm pretty knowledgeable when it comes to Can Slim type trading. I was a little bit reluctant to move this direction with ETFs and with LETFs because of that background. But one thing that incentivized me is that I always had the challenge with which stock do I pick? It's a numbers game. 1 out of every 4 you're going to pick right. And that's going to do well. Okay, I'm just throwing out rough numbers, but with me, I always seem to pick the wrong stock. I hear that from a lot of other people too, that the one that looks the best, you think for sure is going to have the breakout from the cup and handle or whatever it may be, looks like a sure thing, and then it fizzles out for one reason or another. One thing I really like about this is that I can look at the Qs or the TQQQ, and you're dealing with the top 100 stocks in the NASDAQ. And I say to myself, is that going to go up? Or are we going to continue growing the economy? Or are we going to continue going up as a stock market? And if so, are the best stocks going to do the best? That leads me to the Qs and the TQQQ. Are we going to need semiconductors? Yeah, particularly if we're doing AI, we're going to have phases like recently where they become sort of an unfavorable group, but it's not going to last very long. You can see it starting to switch back now, but it's going to grow. The nice part is that I feel more comfortable knowing in the back of my mind that the direction I'm choosing to go is more in line, getting 1 out of 4 as being the absolute best stock. And it's going to really go off and gain 20, 30%. And the nice thing with the leveraged ETFs are the 3x multiplier. I've got a good chance, I think, for making pretty good profit. Those are that's my personal opinion, my personal ideas, but it's part of the reason why I kind of gravitated more to this. I've been using it a lot more rather than Can Slim, particularly over the past 3 to 6 months. It's been a gradual process over the past couple of years, but it's really gone heavy duty this over the past 3 to 6 months. Anyway, the last slide here is on resources. I included the link for the paper trading. There's another one that TradingView does on paper trading that is a little more in depth. I didn't think it was quite appropriate for this session. I also included the tactical rules draft I have. If anybody can think of a better set of tactical rules to use, please let me know. I'd love to get some ideas, some additional ideas. I'll leave it with one last request. If somebody is good at programming and understands Thinkorswim, Interactive Brokers, or some other trading platform, how to implement a small script where you can have the stock price automatically adjusted based on the prior day closing price automatically. If you could share that with us, it would be extremely helpful. Okay.
Gary, can I ask a quick question?
Yeah, sure.
Your moving averages, are they just simple or exponential?
For here, are you talking?
Yeah, where you got 10
tactical
day,
rules?
21 and 50.
Oh, actually, I think the 21 is an EMA, and I think the 10 and the 50 are simple.
Okay, thanks.
Yeah. Good question. I should specify that on the sheet here. You're right.
Hey, Gary.
Yes.
So if I get access to your strategy for a month, do I have to request you again after a month?
Oh, no. What I said is that the people that have the strategy now, their authorization ends the end of September, and I'm going to extend those to the end of November. For anybody that would sign up now, you would be authorized until the end of November.
Okay. Okay. Thank you. And the last question is, when you were giving the demo, the settings that you were showing on the screen were weekly, but the chart was on a daily.
Correct.
We don't have to change the chart to weekly for a weekly strategy.
No, in fact, you will only use a daily chart on TradingView, only the daily time frame. Strategy is either a daily or a weekly setting, but that's the stochastics setting. The weekly looks at the stochastic settings and resets them on a weekly basis. And that's where we get our numbers from. And the daily sets the stochastic settings every day, and we get our numbers from that. The strategies operate a little bit differently depending on which way we go. We've provided a lot of flexibility for you to decide what works best based on your trading style.
Thank you.
Gary, one question on the MACD secondary indicator. Is the principle that if the MACD goes negative, you sell?
No, the principle is that we just used a standard MACD indicator on TradingView with the standard default settings. Other than that, we don't do anything else with the MACD indicator. In the strategy, when we added it as an additional indicator, I said to the strategy, I want you to use the MACD histogram. And if the histogram level gets below 0.5, don't buy. That then causes the strategy to kind of fine tune things a little bit. You saw the reaction they had on a TQQ weekly here, as far as reducing it from 5 to 4 trades and increasing the value by a couple $100,000 and significantly reducing the drawdown. So that's the kind of impact it can have. Now that 0.5 setting is a trial and error thing that we did with spending a lot of time trying different settings to find things that would impact the strategy in a positive way. You won't see it always set as 0.05 for the MACD. As an example, you might see it set as 0.14 for some of the other indicators. It really depends on the indicator and time frame, etc. But it's meant to be very flexible.
And only to be used for making the buy decision.
It only impacts the buy as far as the TradingView executions. If you don't buy, you don't have a selling problem.
Hey Gary, this is Yogesh. So that follow-up question, we are looking at the daily MACD though, right? Not the weekly MACD for the calculation.
The MACD is a indicator on a daily chart. So it's using the daily chart time frame. You don't have to change anything as far as settings on the MACD, and always use a daily chart on TradingView.
Perfect. I have some other questions. You mentioned that if we set up everything correctly from Excel with the same parameters for weekly, all we have to do is match the net profit that we see in the TradingView panel. And as long as that matches, then we are doing it right. If it doesn't match, then we are doing something wrong. Is that correct?
That is correct. So if you get that number to match, that means your settings are correct. Then there's only one additional step you need to do, and that's change the end backtest date to a date in the future so that you will see indicators on the chart currently.
Okay, perfect. Thank you. One of the settings or parameters is enter on tide values. What does that really mean?
It just means that in the rules we showed you where we said that if the stochastics are tied, it's a buy in rule number 1. We can change that with TradingView if we want by leaving that unchecked and saying that, no, that's not going to be the case. So it's just a parameter that we can add additional flexibility to the strategy if we want to, but we haven't actually had a need to do it yet. We haven't seen any benefit of it.
Okay, great. And the last question I have is to get the latest version, we just have to remove the one that we already have and then add it again. Is that right?
Yeah, actually, when I send out a new version, you'll be authorized for that. And I think you actually lose authorization for the older version at that point. Like I said, I'm kind of on the other end of it, so I don't see it in action, but I think that's how it works.
So would it be safe to say that we just wait for your email and then we can have the new version?
Yeah, we'll send out an email to everybody on my email list that has requested the strategy. As soon as we have a new code version, I'll send you an email letting you know that it is available for you to get.
Okay, thank you.
Floyd, a few minutes ago, I put Gary's email in the chat. Gary?
Floyd, do you want me to hand this back to you as far as the share?
Sure. Thanks, Gary. I don't know if the recording is going to be in two pieces because partway through the presentation, I had to log back in. So there's a chance that when I send out the link for tonight's presentation, because you'll probably want to watch this one again because there's so much material, that really good stuff was presented. So you may get two video links. We'll see how that works out when I download. Gary's going to share the latest version of his slides in the best strategy spreadsheet.
I sent them both to you before the presentation tonight.
When I send out the link to tonight's video, I will send out Gary's slides and the best strategy. Like Gary said, start off slow, do baby steps, and maybe just choose one like TQQ or SOXL. Doesn't really matter. SOXL is a little more volatile, so it can make you more money. It can lose you more money. TQQ is a steadier player, but pick one and then learn TradingView. Some of that might be trial and error. The strategy is effective at giving buy and sell signals. If you're going to follow the strategy, the advice that Gary, I'm sure you'll agree with me 100%, is when you get a sell signal, you don't say, let me think about that and let's give it a few more days. If you get a sell signal, you should sell. And if you get a buy signal,
sell. The worst thing you can do is not sell. You absolutely have to sell.
you really need to sell because these things can move fast. I think it was last week. On one day, SOXL dropped 22 or 23% in one day. And so you don't want to hesitate on these things or think about what happened during the COVID crisis. You don't know what's going to happen tomorrow or the next day or the day after. So when you get a sell signal, you sell. And if it turns out that's sort of a head fake and you really maybe weren't supposed to sell, you can always just get right back in. This fear of missing out can get you in trouble sometimes. And so you got Gary here, you got me here. We're using the strategy with success. Start off slow, start off small. And as you gain confidence, you can put on a second or a third leverage ETF. Maybe you can build the account size. But from my standpoint, I wouldn't suggest you ever trade more than, I don't know what the number is, but I wouldn't trade more than maybe 3 of these guys simultaneously. At least for me, I have a certain capacity. If I was trying to do 5 of these simultaneously, I think I get myself in trouble. Fear, greed, all those kind of things sort of go into play. But the advice is start off slow, start off with 1. From my experience, the strategy works for me. It's working for Gary. It may or may not work for you. So you need to know your own style of trading, your own limitations. Once you get TradingView up, there's a couple of videos that show you how to do it. It's really easy to go in and modify a couple of those variables to see if something works better for you. So I think we're going to wrap it up. Unless someone has a really burning question, we'll take maybe a couple of questions. If I haven't answered something that was on the chat, just unmute yourself and let us know if the question is for me or for Gary and ask away. We'll take maybe 2 or 3 questions and then we're going to sign off. Anyone have a question out there? When I send the recordings and the slides, My email address will be on that communication. Don't hesitate to let me know if you have a question. If it's about TradingView, Gary's better at TradingView than I am. It's an exciting time to be investing. Think about what commissions are now compared to what they were 5, 10, and 20 years ago with the online trading platform and tools like TradingView. We have more power now than investors have ever had in history, and we just have to make sure and use the tools with wisdom. Don't take undue risk. And when you get that sell signal, you want to sell. So thanks, everyone. Appreciate the good attendance tonight and the good questions. We're going to sign off, and happy trading to everyone, and with God's blessings too. Thank you.